Give us an idea how the market there is evolving as, you know, we had many of these lockdowns in India come to an end. Are things returning slowly back to normal? What's actually happening on the ground?
Well, to my mind, things are more than normalized. Growth has come back in a big way. I would say that from September onwards, we've been seeing a growth over the previous year's September. So September was higher than September of last year. October was higher than October of last year. So growth is coming back. In my view, this is probably the best time for someone to look to buy a house for three reasons. Firstly, interest rates are probably as low as they'll ever get. You might see a 5-10 basis points interest rate cut because of the festival season, which is on right now. But otherwise, this is the lowest, to my mind, that interest rates can go. In my view, the ability of RBI to cut rates going forward is going to be very limited. Secondly, most developers today offer some kind of a discount if you go to the site to try and buy a property. And thirdly, many states have cut their local taxes, like the stamp duty, which is payable at the time of registration, has been cut in the state of Maharashtra. So in terms of affordability, this is the most affordable time for a house.
Well, you know, India's not out of the woods, ultimately, Keki, is it? And, you know, we could see further waves of this pandemic, but be that as it may, the thing is, how do you protect asset quality when approving home loans against that backdrop and that possible backdrop?
All right, so what we do, the reason we feel reasonably comfortable with our individual loans is because of several reasons. One is the average loan to value ratio at the time we grant the loan is only about 67 or 68%. So the individual who's bought a property has got at least a 1/3 equity in that property upfront. Secondly, in most of our loans, we have co-borrowers. So theoretically, if one of the borrowers, that's a husband-wife jointly taking a loan, if one of them is having some difficulty with the job, the other can take over the mantle of servicing the loan. Thirdly, our loan is amortized every month, and therefore with every passing month, the loan-to-value ratio would keep declining. So if I was to look at the outstanding loans in the balance sheet and look at what the loan-to-value would be on an approximate basis, to my mind, it would be somewhere in the vicinity of between 40 and 42%. So there is a huge equity that is there in the property. Foreclosure in India is relatively easy to do, and you can, within a period of 9 to 12 months, take physical possession of the property if you desire and auction the property and get your money. So therefore, also asset quality on the retail front remains fairly comfortable.
Keki, you're saying that you're seeing market prices falling across the board. We know that at the high end with the pandemic, you know, people are staying indoors. Does that perhaps see a momentum where people want to upgrade or go to an even higher property? And if so, I guess, as you said before, with rates so low, how do you kind of entice people even further to take on more mortgages here and to try and step up, I guess, in terms of what their home is going to look like and whether or not they want to get to that next level?
See, firstly, the structural demand for housing in India is always going to be high, not just because of the pandemic and people staying at home and wanting larger homes and stuff like that, but also structurally, if you look at India, 2/3 of India's population is below 35 years of age. The average age of a first-time home buyer in India is about 38 or 39 years. So it's not someone in his 20s who's buying a house like you would see in the West. It's someone who's in his late 30s. And with 2/3 of the population being below 35 years, what that really means is that 2/3 of the population has not even thought of buying a house. But over the next 1, 3, 5, 7, 10 years, all these younger people will get to an age where they will necessarily have to buy a house. So there is a structural increase in the demand for housing. And if you look at penetration level of mortgages in India, it's extremely low. The mortgage to GDP ratio in India stands at 10%. In China, it's in the mid to high 20s. In most of the developed markets, it's all upwards of 40, 45, 50, 60%. India is only 10%. So the penetration levels are low. Affordability has never been as good as it is. So these are the reasons why housing has become so attractive for someone to look at buying. And also, interest rates are extremely low. So with low interest rates, borrowing money becomes that much cheaper. And plus, there are fiscal benefits that the government has given to individuals who wish to buy a house.
You're sounding very optimistic. I wanted to ask more about what you think in terms of government support as we try to see the overall Indian economy rebound from the effects of this pandemic, because it has been hit incredibly hard.
Well, fortunately for India, the impact on job losses, particularly in the middle income segment, was not as high as was originally envisaged. Maybe at the very low levels with migrant workers and stuff like that, there might be a bigger impact. But generally with the middle income people, the impact has been lesser than what was expected. Of course, there is an impact. Of course, there are some job losses, but it's not as high as one would otherwise have thought in March and April when the pandemic was at its peak. The risk to this assessment is the risk of a second wave coming through. Whether that comes true or not, what will happen, all these are things which, frankly, nobody at this point of time knows. But that is the risk to the theory of the economy reviving, and the economy has revived. People have taken COVID in their stride. People are taking precautions, wearing masks, but businesses are back to normal. People are going to shops, malls are getting reasonably full. People are still a little reluctant to go to restaurants and sit in crowded places. But other than that, I think offices, most offices are now operating at the maximum amount permitted by the local governments.
Keki, we've got this Deputy Governor of the RBI, Mr. Rajeshwar Rao, charge of banking regulation here as well, saying that India's shadow lenders must convert themselves into tightly regulated banks or wind down or scale down operations. What do you make of this?
I frankly don't know. We have sounded RBI, but they've not given us any indication of what they have in mind. To my mind, this is the governor, the gentleman was just joined as a deputy governor, and he was speaking in some forum and probably mentioned. So I don't know. Frankly, I don't know. But the regulations for housing finance companies is not very different from what it is for banks in terms of asset liability management and in respect of a whole host of other things.
Okay, so we're getting, no doubt we're getting a big rebound there in Indian data, particularly with pent-up demand, of course, and we saw how much the economy was hit earlier this year. How do you actually, at the moment, forecast what happens next year for the economy? How do you see it panning out?
Well, if we do not get a second wave, and if we do not get a second lockdown, and very honestly, that is something which is completely out of our control, so we have no idea. But if we do not, my sense is the economy has been bouncing back month by month. Every month we have been seeing that activity, commercial activity, economic activity is increasing month after month, day after day. So I would expect that by the time we come to March 2021, which will be the end of the winter season in northern India, I think things would be, almost all industries will be back to 100% capacity. In fact, in some of the industries, as I mentioned for housing, we've already seen that September and October were better than September and October of last year. For us in our business, for example, our loan disbursements, individual loan disbursements in October were 35% higher than what they were in October of last year. And this is on a very large base. But having said that, October of last year was a relatively weak month because of certain reasons like festivals. There was a festival in November last year as opposed to October in the current year and things like that. But the basic point is that even if we average out the disbursements during October, November, and December of 2019 and compare with October of this year, even then we had a 22% growth in individual loan disbursements on a base as large as ours. So economic activity is coming back to normal. There are still certain industries which are still having some problems, like, for example, the airline industry, hospitality. Hotels are still not, hotel rooms are getting filled, particularly in the outskirts of the city. But in the main cities, hotel rooms, people are still a little reluctant to eat in restaurants and things like that. But barring a few of these industries, most other businesses are back to normal.
So you're sounding very optimistic, as we say, even when you take those seasonality moves out of the equation, and we know that your second quarter numbers were better than expected. What is the forecast for your company for the next year? Are you looking at potentially hiring more people too?
We keep hiring people. We've not stopped hiring. I mean, even in this year, we have hired people. The business is growing. We have to hire people. See, first of all, we don't have too many people working in HDFC. We operate with an extremely low cost-income ratio. Our cost-income ratio is single digit, high single digit. It's about between 8 and 8.5%. So with such a low cost-income ratio, we don't have that much surplus capacity. So if business grows, we have to hire the minimum number of people that are required.
All right. Tell me, Keki, what about the office itself? Of course, I'm sure many people were working from home. You're saying that there are things which are returning to normal. Are you seeing that as people are returning to the office, or is there a reluctance at the moment and people do actually want to continue doing what they were doing earlier this year?
Well, our offices are operating at the maximum capacity that is permitted by the local government. So, there are certain states where they permit 1/3 of the people working from office. There are places where they permit 50%, and there are places where they permit more. So whatever is permitted by local rules, we operate at that capacity. Now, as far as reluctance on the part of people is concerned, we are considerate of people. So if people beyond a certain age, people young women who are pregnant or women who just have given birth, these kind of things, we would let them continue to work from home for a while. So this is part of the HR policy.